Hello and welcome to our latest episode of the Paytech Show. This week, it's all about getting real with real-time payments. So, at Sibos, we sat down with Julie Harris, the Global Head of Banking Digital Strategy at Bank of America, who are one of the institutional leaders in the technology. And once again, we got the lowdown from payments guru Craig Ramsey over at ACI Worldwide.
So firstly, we're seeing fantastic adoption across the world, actually. There's now 60 countries that are either already in their real-time journey or are live or are planning. So, and that's across all the continents. Australia went live last year. Hungary is now in its pilot phases. Europe is live. We're seeing multiple schemes in Europe, the domestic schemes. So we're seeing fantastic growth. And when we look at some really standout countries like India, where they've gone from a few transactions now to almost 1 billion transactions a month, this is huge growth in real-time payments generally. What we're now going to see is the next stage, how banks will start to offer more products and services, or what we call overlay services, as to why a customer would want to use the real-time rails in the first place. I think in some countries we're seeing growth being a little slower than was predicted, but we're on that new wave. I've seen commentary about real-time payments being the new normal. It's here. That is the normal experience. We all want a real-time experience, and that of course should go as far as our payments as well. No one wants to see a payment finally getting there at some point in the future.
Now, at our studio booth, Julie Harris gave us her insight on why there is such a demand for real-time payments and other such innovations. So Julie, can you tell me, technology has always been at the heart of finance, but now more so than ever. What does this mean for Bank of America customers?
Yes, well, our clients, as you said, are always focused on technology and innovation. The difference in this day and age is the pace of change. And so if you think about it, a lot of the innovations in technology really start with the consumer experience. So our clients as CFOs and treasurers go throughout their normal day and use a QR code at the airport. They use e-signature for rental agreements, even dealing with the governments around the world. Everything's electronic, document upload. It's easy to do business. They expect that from their financial institution. And that's really driving the technology and innovations for us, for our clients, to make it fast, smart, and secure for them to do business with Bank of America.
So what do you believe has been some of the biggest drivers to really have forced technology to change in this way?
So we think of three things. Number one is technology itself. So with the evolution of 5G, that's driving autonomous vehicles, that's driving data organization in a way that AI and robotics can sit on top of that data, is completely different than it was even 2 years ago, 5 years ago, and certainly 10 years ago. Number two is globalization. So the ability to transact around the world at the pace that we can today is also completely different and driving expectations of our clients, especially when it comes to payments and the real-time nature. And then number three, interestingly, is the changing workforce. So when you think about the fact that 60% of our workforce next year will be millennials and Gen Z, 60%. And think about millennials and especially Gen Z, they're digital natives with 90% penetration of smartphone. So their expectations of doing business anytime, anywhere, across any device is really driving the changing nature of the expectation of our clients.
There are 20 more real-time payment networks about to hit shores in 2019 and beyond. What does this mean for financial institutions and SMEs going forward when it comes to finance?
Absolutely. Well, the pace of technology is at a speed which we've never seen before. And we think of three areas really driving that. Number one is speed, as you mentioned. Our clients expect fast. They expect real time. Number two is smart, and it's intelligent along the way. And number three is secure. So that speed, i.e. fast, and smart cannot come at the expense of security. And those three expectations are really driving not only payments, but many other technology and innovations. We also wrote a megatrends paper around treasury, and it really defined the need for real-time payments. When you think about the end-to-end supply chain, and from the fact of selling goods to ordering goods to delivering those, The value chain along the way is to receive those payments quickly, take the credit risk out of the process, and that's driving the need for real-time payments. Also, the fact that there's multiple options for payments, and we have to deliver the capabilities for our clients to make payments and receive payments across the entire platform. So that fast, smart, secure is really driving our investments in infrastructure around real-time payments.
That's it for this week's Real-Time Payments episode. Be sure to check out the rest of our series and much more over at www.fintech.finance. See you next time.